Hello guys, in this video we will talk about which country deserves your hard-earned money for investment, US or India. US stock market has always been an enigma for growth. Some of the biggest companies in the world are listed there, while India is one of the best emerging market with lots of potential. For the sake of this video to compare, we will use Dow Jones Industrial Average Index DJI as a proxy for US, and for the Indian stock market we will use BSE Exchange. So let's get started. Round number 1, performance in terms of returns. In the last 10 years, both the US and the Indian markets have generated a similar returns for their investors. The DJI has generated a compounded annual return of 9.75%, whereas the BSE has generated a return of 9.70% in the last 10 years. The return in the first 5 years of the decade 2011 to 15 were also pretty similar, with the US markets growing at 12.86% compounded annually, whereas the Indian market grew at 12.11% compounded annually. So I guess no one is winning this round. Hence, we will be giving 1 point to each, as this return is consistent and a good money. Round 2, volatility. Volatility is the standard deviation of returns around its mean. It is good indicator of how much the market moves up and down in the defined period of times, preferably in a short term. A lot of long-term investors tend not to care about this, but it is important because if you are involved in a highly volatile market, then a market dip might compel you to sell early. Hence, volatility can work as a measure of a risk. When we look at this last 10 years returns while calculating the volatility, for Dow Jones Index the number was 3.92%, whereas BSE Sensex was considerably more volatile at 5% in the last 10 years. On this evidence, it can be inferred that at least in the last 10 years, the Indian markets have been riskier while giving the same return as the US market. So this round goes to US market and the score is US 2 points while India at 1. Round 3, top performing sectors. If we look at the sectors which we have the most weight in an index, then that is a good indicator of which sectors have been growing the most in economy. Here you can see top 5 sectors in that particular index by weight. It is clear that financial dominance It is clear that financial dominates the Indian index while US market favors tech firms. Due to COVID-19, future will be definitely favoring the technology companies, as there is a growing need to move the business online. On another hand, India as a growing economy will be beneficial for its financial industry. So we'll declare this round at a tie, giving 1 point to both of them, and score is US 3 and India 2. Round 4, valuation. In terms of valuation, the Dow Jones Industrial Average has profit to earning ratio of 16, whereas the BSE has a profit to earning ratio of 33%. This doesn't mean that the Indian market is overvalued and you should only invest into US market. It is essentially mean that the market believes that the earning of Indian companies will grow faster than the US companies. Given that the Indian GDP has grown at a faster rate than the US GDP in the recent years, this might not be an unreasonable expectation. In the last 10 years too, profit after tax of an Indian companies in the index grew 12% compounded annually against 11% compounded annual growth of US companies. I don't feel like giving this round to anyone, but has to choose a winner here. So for the valuation, we'll give 1 point to US market and the score is 4 US and 2 points India. Round 5, size. In terms of size, there is no comparison between these two. The combined market capitalization of all the stocks in the DJI amounts to $8.33 trillion, nearly 8 times the combined market capitalization of all the stocks in BSE Sensex at $1.16 trillion. Given the size of the two countries, this shouldn't come as a surprise. No points for anyone in this round, as this doesn't really impact much for deciding which market is better. Round number 6, government efforts and future policies. With the US dollar weakening and a new, perhaps more trade friendly Biden administration taking power, emerging markets including India will have an edge for growth in the coming years. China is definitely a winner here, but India do have a piece of pie to eat. Current Indian government efforts to vaccinate the country is as good as US, and they have their local vaccine manufacturing companies with three possible options. Comparing all the other research from the big banks and the market sentiment will give a 1 point to India here for this round, as there is big room to grow for Indian market. And the final score is US 4 points and India 3. To conclude, US market has given slightly better return as compared to the Indian markets, and that too with less risk and volatility. With 1 point, US market wins the race for this video. However, whether you choose the Indian market or the US market, try to diversify your investment portfolio to take an advantage of good things from both the market. What are you guys thinking? Feel free to comment more points which we didn't cover in this video. Happy investing and bye bye.